All right, well, we're going to get started. I'm sure we'll get a few more stragglers joining us this afternoon, but I know it is such a busy time, and everybody made time to join us this afternoon, including our esteemed guest, Scott Simpson, the president of America's Credit Union, who we are so excited to have joining us. Of course, America's Credit Union is our national trade association, and with the partnership with the Association of Vermont Credit Unions, we are so delighted to have a partner that is supporting our efforts in Washington and keeping us informed of the issues that are impacting all of us at the state level as well. And we're really, excited to hear from him this afternoon about this new role that he has taken on in the last few months, and also what he's seeing in Washington and what trends he's predicting to be facing all of us in the coming months. And hopefully he'll give us a little sneak peek at what we can expect at the Governmental Affairs Conference coming up in less than 2 weeks. But again, so excited to have Scott join us today. Scott, we have credit union leaders from all across Vermont joining us. And so really looking forward to hearing from you, looking forward to learning from you. And again, thank you for your partnership.
Well, thank you, Carrie. Good afternoon, everybody. It's good to be with you. It's always easy, as nervous as I get, sort of almost every meeting I go to is high stakes, high consequence moments, but it's always easy to be with credit unions, members of the credit union family. I think in large measure because you all are so good at what you do. It makes defending what you do for a living just an absolute honor. So I'm grateful to be here and very energized about the opportunity that we have, but also the challenges that are in front of us. Carrie, we were just before the call started, we were talking briefly about the state legislative environment, and I've come from 23 years of working in state legislative environment on behalf of credit unions, and for about 22 of those years exclusively in one of the most hostile anti-credit union legislative environments in the country. And it feels very familiar to kind of be in the soup that we've been in the first 5-6 weeks of 2026. I've been to this rodeo before. We are on the very close to gathering in Washington in just a couple of weeks. It's good timing, as you well know. Oftentimes we're heading into the GAC wondering what's in store for us in the legislative session. I think the last 2 years have been extraordinarily telling, where at least we had a hunch in the fourth quarter of 2024 that 2025 was going to have a taxation challenge for us. And there was both success there, but I also think there's work that we need to do as a result of having engaged at that level. And we can talk about that more downstream here. But in 2026, again, I've said this on a couple of other occasions, there are just things that I did not have on my bingo card that have occurred, right? Having a Republican White House become the champion of a price fix in the free market system, it's counterintuitive. And you spend a lot of time in the political analysis, but it's all about the tussle for populism. And the fact that we are a populist solution, a regular people solution to financial services, it stands to reason that somehow we might get sucked into the vortex of that struggle of pursuing the political middle of the country. And so, I think, having been dealt cards relative to the rate cap environment and interchange, and having the President of the United States germinate both of those things for us in 2026, put us in an interesting position. But I think we've navigated it really, really well to date. I'm not suggesting we're done, but so far we've been able to push back and thread the needle of diplomatically keeping the harm at bay. In when I say diplomatically, there are other organizations that get back against this White House and end up, ticking off the White House, and we have to try to navigate policy solutions that are in our favor without creating an enemy that has the capacity with just a couple of clicks to inflict damage to our brand. And so I feel pretty good about that. And it's not just, we had rate cap, which when it was first declared, not knowing which pathway we were going to be on and what authority the president was going to claim. And then we were able to sort of steer toward that outcome of putting it squarely in the hands of Congress, which is where it obviously belongs. But then that created a situation where we have to engage Congress, and we've got 535 members that we have to deal with. But that's a very familiar arena for us. The president, knowing full well when his Davos address moved that issue to the Congress, he kind of needed an off-ramp from a political perspective. And the sort of tangent that he took for that off-ramp was interchange, which has nothing to do with consumers. Like, it does not benefit consumers at all. But in spite of the fact, taking just the cosmetics of that and shifting it has emboldened the retailers and Marshall and Durbin. And again, I think we, with our counterparts in the retail financial services space, but this is an issue where they use us as kind of their human shields. We end up being credit unions and community institutions end up being the tip of the spear. We've engaged really, really well and held policymakers, in spite of the fact that there was presidential pressure. We held policymakers so far in the place that they've been, which is, opposed to a radical alteration of the interchange system for credit cards. So I feel really strong about that and good. And I think there's reason to be bullish about where we've been over the last few weeks. I think as that reality has played out over the last 6 weeks, it allows us to sort of predict the future of what this Congress might feel like. And I don't see an appetite in the Senate in particular to take up interchange. We've, with everything that I say should have a caveat, but that the president can create will quickly with the bully pulpit. But so far, we've been able to manage that effort, that potential really well, in my view. So again, I recognize it's significant and we have to stay in the game, and our teams continue to talk about it. And you're going to hear us talk about it and ask you to remind policymakers of the position that they need to be in when we hike the hill in a couple of weeks. We've just got to keep our foot on the throat of the interchange, the Durbin Marshall bill. But the steps that have been made in this very urgent moment in the first month of the year have gone as well as we could have hoped. We had some other positive moves. John, do you have a question?
Oh, does that show up even before you click the button?
No, I just had a feeling that I could see it on your face.
Yeah, so let's stay with interchange for a minute,
Yeah,
if we could, because just for your awareness, and Carrie may have already shared this with you, but our congressional delegation isn't necessarily in line with our industry, and we've been working at that for years. But you may know that one of our senators is a co-sponsor of that interchange legislation, and the other senator is pretty clearly staying on the fence. But we don't have, some of us may not have much confidence that he would be supportive of us. Right. So that's there, and that's more of an awareness. The second thing, since we're talking about interchange, you may also know that that this issue of tips and taxes, sales taxes,
sure.
that ruling last week in Illinois is going to, I'm concerned that in Vermont, but especially in the State House in Vermont, this could really allow for the proponents in the State House to try to make quick work of a similar, it was already in the State House. This
Sure.
topic has been there. It's been tabled while the court case got resolved in Illinois. And again, I know this isn't new news to you because there's 20 other states that have the similar story, but we are certainly one of them. And as much as we will be involved in that discussion in Montpelier, I'm not necessarily confident that we're going to be able to really get to push it back much.
Yeah. No, I was in a similar boat in Sacramento for the last 2 years, and Salt Lake City. Actually, we were a totally different legislative environment, but the merchants, it's very clear they're objective. In particular, Walmart, they have gone around actually some of the typical retailers associations and done their own work. If the local retailers association or grocers won't move for them, they'll go around them to try to create. Their strategy is to create enough chaos in the state houses that they can say, look at this chaotic scene, Congress, you need to fix this. I think that's what they're trying to tee up. Yeah. Is the chaotic scene that then is the mandate for the U.S. Congress to engage in the system. And clearly that ruling has will be fuel for the merchant space. There's no doubt about it. In addition to that, I still kind of hold my view that most members of the Senate in Washington are tired of Durbin and Marshall on this issue because it's pitting constituencies against one another, and all of them have already paid the political price for the position they're in, because this is, we're 10 years plus downstream on, well, right. Gosh, was it 14 years ago when the Durbin Amendment to Dodd-Frank passed, right? So we're well downstream of this credit card version of this, and the payment sort of rail version of it that we've been dealing with, and they've all paid the price for the position they're in. If they move, it's worse for them. They compound their political realities in their districts, and so that inertia, I think, works in our favor, and that's part of, we would love for Vermont senators to flip position or to change, but movement is the lack of movement is actually better for us. Like but we want people to come our direction, but we don't want movement on the side because we right now have enough votes to stop it. Okay. It's one of the great things about the Senate is a determined minority can stop anything, unless it's budget reconciliation, of course. But a determined minority can stop anything, and so I still feel okay about that, but we will not let up. I just am trying to give you my sort of a clear view of what's going on there. We're engaged, by the way, in the states. We have constant communication amongst the leagues in the country of what's going on, and this this reality that you're facing in Vermont and is undoubtedly going to end up in about 25 other states in the coming months will be that there is genuine Washington, D.C. reason for the National Association to help in whatever way we can and to deploy resource and collaborative energy wherever we can on that.
Yeah, it is certainly an issue we're watching in the state of Vermont. To John's point, there are 3 bills that are currently introduced in the state of Vermont, 2 in the House, 1 in the Senate. I hesitate to say anything because, like Scott mentioned, it could change relatively quickly, but right this second, we're not seeing a strong appetite for it to move in this session in Vermont. Now, like Scott just mentioned, with so many other states, more than 24 other states considering bills, and the Illinois bill, the ruling in Illinois coming out, it could make other states move quickly, which could shift the tide for everyone. And so we're certainly watching that. But the Electronic Payments Coalition is regularly meeting. America's Credit Union participates in that very actively. We've been having both a national conversation, a regional conversation, and even a state conversation almost weekly to sort of talk about where should we react. Some of you may have read a couple of weeks ago, there was a retailer who published an opinion piece in the Brattleboro Reformer that talked about interchange and the need for the Credit Card Competition Act, and encouraged state lawmakers to get involved because it wasn't moving at the national level. And we are prepared at the state level with local retailers who will be willing to share their own opinion pieces, but we're also watching carefully because we don't want to unnecessarily stir up the hornet's nest. And so, trying to work with our national partners to figure out the best tactics and when to pull the levers that we have them is certainly very important to all of us.
We're also right on the edge of launching a campaign that will be sort of DC centric around interchange. It'll be with the lawmakers in mind, but it's alongside the Electronic Payments Coalition, just talking about the harm that would be done in that space. So it recognize that it's huge. There's one other sort of component now that is related to interchange at the DC level. This may not have a direct connection to what's happening in Vermont, but there are bank reforms. There's regulatory relief packages in the House Financial Services Committee that have just been introduced in the last little while. One is federal housing finance work that Chairman Hill has been pushing. They included in that our Credit Union Board Modernization Act and a couple of other pieces of legislation. They introduced and passed one more time just to try to get something over to the Senate to move on. Board modernization passed before. That's one package. Another package that was introduced by the Financial Services Committee in particular, there's an Andy Barr bill that you probably saw the trade press that he and what's his name, Senator from Texas, Ted
Cruz?
Senator Cruz. Yeah, I was thinking Ted Williams for some reason. Sorry. So they introduced a piece of legislation that has sort of wide regulatory relief or adjustment to definitions of thresholds. So the one that we think about the most is the $10 billion threshold for debit interchange, right? That's a significant, doesn't affect a lot of credit unions, although that threshold has become sort of increasingly meaningless over time. But there are obviously credit unions that have had significant impact by that threshold. That Andy Barr bill, among the many thresholds that it makes adjustments to, makes an adjustment to that $10 billion threshold and moves it to $30 billion and then indexes it to grow with the economy so that it's not static and become meaningless over time. And I don't know whether or not that bill has got long-term success. We are fanning that flame, and we are going to ask you when you come to town to speak in favor of that. You've got decisions you've got to make how that fits with your delegation and how they might react to that, regulatory relief. But we are going to push that because the philosophy of indexing to the economy on any threshold is a philosophy we want to have front of mind for policymakers for these thresholds. In part, what I've asked my team to engage on is we need lawmakers that may be called upon to draft a scheme if the pressure builds around interchange. The idea that if they're going to create a carve out, which they've always tried to do, right? You know, they've been talking about, is it $100 billion issuers and below are exempted from the Durbin-Marshall bill as they had originally drafted it. Again, trying to, you know, say that this is not going to harm small issuers. We like the idea of having those thresholds indexed to the economy. And so we're going to be asking you to talk about and hype this Andy Barr bill, for, not just for the Durbin, but other threshold limitation adjustments that can be made, because it has the secondary effect of introducing a philosophy into the minds of policymakers at large that we think we may need to call on if interchange does get away from us in some way in the short term. So that's you're going to hear us ask you to be supportive of a Republican from Kentucky's bill, but there's a reason for that, and that's sort of why we're, I don't know if I explain that sufficiently here, or will artfully be able to explain the reality of that when we're in Washington, but it's sort of an intended 1-2 punch if needed. We've had another sort of threading of the needle that happened, I think, really well in Washington is CDFI funding, this grant funding that had been withheld by the administration. Last December, I went up to the White House and met with the undersecretary that had responsibility for that program, as well as over in Treasury, we met with the staffer that actually handles the CDFI fund. And those not every credit union avails themselves of that source of funding, but many do. And we were able to carefully push back against the president using a bicameral letter of 120 Republicans from the House and the Senate to move that. And as part of this latest funding bill, it got fully funded at 2025 levels, which is positive news. And yeah, there's NCUA's got a community development revolving loan fund that was also funded in that round. So those are careful threading of needle that we've had to do, where we're, the administration, or at least someone within the administration, has got very strong feelings about the death of some of these programs. We've been able to come in and use Republican pressure to actually have those things move through and get funded for 2026. I count that as very positive development and careful maneuvering on the part of the advocacy system we've got amongst credit unions. Yeah, I mean, I'm happy to talk about any number of other things from a legislative perspective. There's a number of regulatory relief proposals that you'll hear more about in the coming days as we ramp into the GAC. Obviously, I think one of the things I hear about the last few weeks, actually for several months, but it become more pointed in the last few weeks, is the composition of the NCUA board and sort of the uncertainty that seems to exist there. We heard back in December in another White House meeting from the gentleman whose responsibility it is to vet these appointees for the president for appointment, that they had someone in the pipe ready to go, and that they were pretty motivated about it. We did our poking and tried to get what we could out of it. I actually anticipated an announcement prior to even where we are today. We've done a little pushing since obviously the announcement of Chairman Hopman and his appointment to his new position. And yeah, still have confidence that they've got a candidate for that position. Now, and that's what we heard in December and felt was that they weren't contemplating making any appointments in the other two positions because of the legal cases pending there, but definitely had a new chair ready to go. And I it's tough to predict the future and exactly where we'll land on that, but I think I've tried to put on my President Trump hat. You can decide what that might look like, but I'll put on my President Trump hat and try to figure out what that administration would want. And keep in mind, when you've got only one member of a board, you don't want to experiment with who you've got running that agency. And so I suspect you can count on them picking somebody that they know, they're comfortable with, that passes whatever loyalty test that an administration would have. I think that's the more likely route. Not necessarily somebody from industry or somebody that we might be comfortable with. I think in it, when you've got the full complement with which to choose from, they can make a decision. Like I would say the second Republican appointment would, very likely be somebody that industry could try to, somebody from inside the family potentially. But I would not expect somebody, and Hoffman is a perfect example. Maybe not a perfect example, but it's an example of that. Somebody that's got previous party administration, treasury experience, not necessarily industry aligned at this point, but somebody who is confirmable by the Senate. And that's kind of what if I were betting today, is where I would place my dollars at this point. And like I said, I could totally be wrong about all of this. I expected an announcement prior to now, and something may be coming. And Hotman's going to be on our stage. I'm right now slated. He may tell us to pound sand, but right now I'm slated to interview him in a little fireside chat in front of everybody. And I've been thinking about this. What is Kyle Hotman going to do? Is he going to go out guns blazing and shoot all of us, on his way out, or what? He's kind of a wily guy. So that will be something interesting to observe in what his sort of moment in front of the industry might be like as he concludes his service on the board. As it relates to that, a lot of people continually get asked, what about regulator consolidation? We don't hear more about that. Does that make sense? Like, I think there was a ton of worry about that last year, but as we've continued to move, we just don't hear anything about that. No pressure. All the conversations we have with Treasury, there's no indications that we've gotten that there's a broader agenda afoot, other than Project 2025 and the sort of original aspirations. And the thing we've got to have the original aspirations of Project 2025. The thing we've got to be realistic about is those architects are in the inner circles of the administration. So there is a chance that at some point somebody might decide that's a hill they want to die on and try to move that along. But that would require congressional action. And it's what I said about interchange. I like our chances in at least trying to get to rationality in a conversation about the regulatory environment for credit unions. I can answer any questions about our organization itself. Like you, I'm trying to make sure that we're built for tomorrow, not for yesterday. And there's things we need to work on. But I'll shut my yap and let you ask me questions.
Well, Scott, I think that would be interesting. I'd love to hear a little bit about what your thoughts are, having come from, Leagueland and working with, your state credit unions to the National Trade Association, where maybe is your position different today than it was on day one? What are you seeing from the industry? What are you hopeful for as you work through the next 6 months on the job? You know, tell us
Yeah.
a little bit about where your head is at.
Well, thank you. There are a couple of things. First of all, 535 seats is massive. I worked in the U.S. Senate before I went to work for credit unions 25 years ago. I had a pretty good idea. I was here. I knew what happened. But from a lobby, having spent 22, 23 years working in state legislatures, coming back to 535 and kind of the ecosystem, nonstop ecosystem that's Washington, that is designed to grind, right? It's designed to be slow, is a different game, and that's I've had to kind of recalibrate in the last 90 days. And I've had that conversation with the league presidents. I'm like, I know you want to punch the America's credit unions in the face sometimes because of it feels like we're slow, but I'm telling you, 535 is different than what you feel in a state house. So that's one thing. I'm bullish. I'll show you this. That you can't. This might be hard to see. Oh no, it's not. This isn't too bad. This is the ACLI is a life insurers, America's credit unions. Life insurance industry is their thing, right? Check this out. Like our own measurements that we do here about what our influence in Washington is. Obviously, you kind of feel like if it's a report card that we've hired somebody to do on us here, we may get biased information. This is from the life insurers. Look who's number one up here. You know, their slide is like, hey, we're pretty good. We're here in the middle. I just happened to pick this up from them. I'm like, can I have that? And took it because look where we are, and look at like the intensity of the favorability in Washington D.C. that credit unions have relative to the rest of retail financial services. It's so that just happened to be sitting here on my desk, but that's strong validation from my view. Like I've wondered a year ago, and I may talk about this on the stage on Monday in a couple of weeks. I wondered, how did we get through? Like, we're wildly outspent in Washington by our opponents, right? American Bankers Association has twice the income statement that we do. And I discovered that because I first went to the lobbying expenditures and found out that they spent twice as much money on lobbying in Washington than we do. And so then I went and looked at the Form 990s. You know, I'm like, okay, well, they've got twice the income statement that we have, and more than twice the balance sheet. Like and that doesn't count B of A, City, Chase, Wells. You know, they have all got operations that are massively larger than anything we have in our space. And so given all of that, I asked myself this question. This was last fall. I'm like, as I was taking on this responsibility, how are we not dead? And the reason we're not dead is because we're not competing with them symmetrically. We have a ground game. We have the brand equity that really is yours. Each credit union has with its membership. We've got leagues. We're diffuse across the country. We're not concentrated at K Street in Washington, D.C. We're diffuse across the country. And so as a political practitioner's perspective, I am giddy about that because I think we haven't even come close to perfecting that strength. You know, Don't Tax My Credit Union created 880 some odd thousand contacts to Capitol Hill last year. 880,000. In the 23 years I've been involved, that's the high water mark for grassroots activity that we have measured. And it is woefully insufficient. A little backstory of that, and I may have said this before, but half of the 880,000, half of those contacts were created by 2 states. 25% of the 880,000 voter contacts to Capitol Hill were created by one credit union. And so had we all performed at the level that credit union had relative to our fields of membership, we would have had 17 million contacts in Washington. And so to have that much latent political possibility within our movement, as a practitioner's perspective, I'm super stoked about that. Like to have the capability of harnessing the political energy when required, when needed, to defend this business model is exciting to me, and I hope to speak to that as we get going. Now that we've got a ton of work to get done. In the meantime, I look at our shop, and I suspect you all look at your shop. I can't even use the word tech stack to describe, because stack's not the right word to describe our advocacy technologies that we've got at America's Credit Unions. That's an investment we are going to make. That's an area of building that we are going to move in. There's lots of cool opportunities downstream.
And you've talked a lot about unity in the industry and how important that will be to our future and our success and sustainability. What can each of us do to support unification of the system?
I think what I would ask, and you all here, this is preaching to the choir because you're here on the call, but I think, as the competitive tensions of being in the marketplace grow, and we all know this, there are fewer and fewer credit unions, which means I think the tensions are distilling as we get fewer and fewer credit unions, which means if you're a small credit union, the weight of competing with a large credit union, I think, is feeling heavier as a result of that, compression in the marketplace. That tension that makes a credit union angry or want to, push away from the table, I think what I would call on or ask you to do is to scoot closer to the table. We will come undone so fast, given the environment that we live in this town. Dividing the herd is how predators win. And we've got to stay together. And so I have felt that. That was a heightened sensitivity to it coming into the job, and that's why you've heard me talk about it. I feel like one of the first things I had to lean in on is the health and vitality of the family, and trying to get the credit union, family to hang together.
Yeah. And you also have, you and your team have stood up small credit union roundtables and asking for feedback from credit unions of all sizes. Tell us what some of the things you're hoping to learn or to work on through that initiative.
The ambition was, and I hope it works, but what happens is when I've noticed, and I've been in a lot of these meetings, hundreds of these meetings where you've got varying asset categories, and what happens is the power dynamic tends to develop where a smaller credit union might be quiet. So in spite of the fact that we've got maybe small credit union representation on our advocacy committee, it's entirely plausible that a power dynamic in a room may prevent a smaller credit union from talking. And I wanted to ensure that we had special listening machinery for the small credit union voice as it related to advocacy. And so we created this small credit union advisory panel so that our team could hear an aggregated voice directly and try to get it as perfectly captured as we could get it, without the filters of whatever power dynamics might happen when you aggregate the full family. Now it's just an advisory committee. We've had one meeting. They're going to gather again, I think, in DC here in a couple of weeks. But I can already tell that it yields incredible results. You can tell that there's pent up desire to say stuff and an aspiration or a hope that someone's listening.
I'd love to see what questions may have cropped up for all of you that you may want to ask Scott this afternoon. Anybody have anything?
Yeah.
First, let me jump ahead of you, John. Hey, Scott, first of all, thank you so much for joining our tiny little state here in Vermont. We really appreciate it and welcome you to the big team. I don't have a question that's on point here. Carrie will probably give me a hard time later for asking this, but just curious from your background, I'm hearing some goofiness in a merger in Southern California and that has gone through some legal action. Just wondering if any perspective on that.
This is, I don't have the expertise to render a real opinion. I mean, I know the credit unions well. I know the market well. I know the CEOs relatively well. I don't know why it's unwound, other than, you've got San Diego is one of the most competitive credit union markets in California. It feels like Utah. Like Utah is the most concentrated credit union market in America, and San Diego feels like that. There's just a number of large credit unions operating in that market. You can drive down the road and just point to branches, right? And so I think there's a little bit of that. I haven't monitored every merger of larger credit unions, but you have this aspiration of that you sign an LOI on, and then you get into kind of the weeds, and board culture and collision starts to occur, and it takes incredible discipline to get through that. And I don't know what happened to cause those collisions, but again, I think it's in part it's got to be because you've got folks that were competing against one another in the same footprint, trying to accomplish something that requires unbelievable discipline in the best of circumstances. It's kind of come, it's become a news story that's tough to even read.
Yeah, thanks.
You bet.
Scott, going back to kind of the evolution of America's credit unions, I just finished a number of years of being on committees at the national level, and the Advocacy Committee is a good example of this. I'm just curious whether you think there'll be future changes in the scale of those committees. The Advocacy Committee, for example, has somebody from every state. So I think the total committee was 100 people last time I was on it. So just your sense of the committee structures and the opportunities for leaders within each state's, kind of the credit union industry to participate.
Yeah. Well, we represent 4,100 some odd credit unions. And because of the Jeffersonian method of allocating Senate seats in this country, it puts Vermont on the same footing as California. Puts Utah on the same footing as California. And so, since I've been paying attention, in the last 25 years, there have been two majority leaders of the United States Senate from South Dakota. We have the Speaker of the House and one of the majority leaders from Mississippi, and one from Kentucky. We've got Louisiana, Speaker of the House. We had two Californians before that, but it's the reality is we represent, as America's credit unions, 50 states. And we have to, it is in our interest to make sure that we, again, back to kind of the piping and machinery that we build, that we have each of those jurisdictions connected. And I totally agree with you about inefficiency. As a path to consensus, it's infinitely more complicated to have 100 people on a committee. There's no doubt about it. But somehow, having our advocacy system built in a way that allows us to aggregate the political realities of each of those states, because at any moment, any one of them could have a committee chair of a committee of jurisdiction chair or a leader that we have to have and have a relationship with and have all the connections to. And so it is, I've wrestled with the advocacy committee in particular when it was first proposed that we have, a certain number from each state. It's staggering, but it's got its own purpose, and there are other venues for, distilling and aggregating consensus.
Yeah, well, thanks for that. I actually agree with the idea that there should be participation from each state. So I appreciate the response.
Yeah.
And I didn't use the word inefficient, by the way. I was just
Oh yeah.
I may have implied it, but
yeah. No, I mean, I've been in those meetings.
I know we've been in them together. So
yeah.
Under Scott's leadership at America's Credit Union, I think we're already seeing a more closely aligned system that's working with the league presidents and helping us to share communication with all of you. And I think, that will continue into the future. And hopefully there will be ways in which we can, as Scott just mentioned, find opportunities to engage credit unions of all shapes and sizes, and then be able to share information in both directions. One of the things that, in response to Sean's question, the concept of competition versus cooperation, and how do we find a healthy balance in our industry? And I hope that that's a future discussion that we can all engage in. Is collaboration is really helpful to our industry, and finding healthy collaboration that spurs innovation without creating undue pressures for the smaller participants in the system will be really important for the success of our industry moving forward. So we appreciate all that America's Credit Union is doing to work with us at the state level, and vice versa, engagement from all of you in our national advocacy. Did anybody else have any questions before we move on with our Tuesday that feels like a Monday? Well, Scott, we are so thankful for having you join us in Vermont. We hope that you will come visit us in real life, maybe when the snow stops flying.
No, I want to come up to one of those sugar shacks in the winter.
Oh.
I don't know what that's all about, but I had a daughter that lived up in Montreal for a while, and the whole maple industry was a thing, and so
First thaw. Got to come up after the first thaw.
The first thaw.
Yeah, that's when the sap
close.
starts running.
Yeah.
Okay. After I said Sugar Shack, I wanted to make sure that I wasn't saying something, inappropriate, because I don't know. Maybe it's.
No, that's Maple Sugar Shack. Yeah.
Is that what it is?
You're good. Yep.
Yeah. It's pretty.
Yeah, there's usually a day. There's usually a couple of days, weekends, where they all have like open houses. So.
But it's not the same deal as in Quebec. Quebec has different issues.
She did a thing where they were rolling it in snow and all this
like
stuff.
a lollipop. Yeah.
Well, we are happy to host you anytime.
Yeah.
Okay.
We'll give you the tour.
No, that or fall foliage. You probably are. Is it the kind of thing where it's like, white people going to Hawaii, they call them haoles. Like when the southern states come to Vermont, what's the word? What is it?
Leaf peeper.
Peepers.
It's a leaf peeper.
Leaf peeper. I knew that. I knew there was a word. I knew it.
Also, Flatlanders, we call them that sometimes.
Yeah.
Uh,
Well, I was raised in the Rocky Mountains, so I'm not a flatlander.
no, you're not.
Yeah. You'd have to
Sure.
be
We-
from Massachusetts and Connecticut for that kind of
Okay,
labeling. It's a New England thing for sure.
gotcha.
But we
Gotcha.
appreciate you joining us today. We appreciate the continued engagement with America's Credit Union and really great communication and transparency through this busy session. We look forward to seeing you in just a couple of weeks in DC. We have a good group of Vermonters joining us in the Capitol. And looking forward to some Hill visits with our lawmakers. But again, anytime you want to visit us in Vermont, we certainly appreciate it, and we appreciate all you do for credit unions every day. So thank you all for your time today and for joining the conversation. We look forward to seeing you again really soon.
Thanks.
See you in a few weeks.
Bye.
Thank you.
Thank you.
Thank you.